Alright, yo, what is up, guys? Welcome back to another video. In today's video, we're going to be going over SMTs, which is pretty much short for smart money technique or smart money divergence. So we're going to be going over that and pretty much explaining it fully in depth, as this has been a highly requested topic. But anyways, let's get into the video. Okay, so starting off, an SMT is literally short for smart money technique. Now what this basically means is it's a divergence between the two correlated assets. Okay, so we have ES, which is S&P 500, and we have NQ, which is Nasdaq. You also have YM, which is the Dow, but I don't tend to look at that asset because it's not as correlated as these two pairs are, so I tend to stick to only these two pairs. Now let's say, for example, on ES we will have a lower low and another lower low, and on NQ we would have a lower low and then we would get a higher low here. Now this would be a bullish SMT, right? And what this pretty much signals is that smart money is accumulating positions here to go long, and therefore price has not taken out this low here, so you can expect for price to start displacing higher, and pretty much you can use this smart money technique as a confluence towards your trading model. Okay, so that is pretty much a bullish example. Now I'm also going to be showing you a bearish example. Just a quick reminder, guys, the live singles room is still available for only $50 a month. Now I wanted to show you this week's results inside the live singles room, as we only took 3 trades this week and they all ended up being W's. So as you can see here, I give you the analysis in the morning, your entry price, stop loss, take profit, all of the good stuff every single morning. Now we only took one small loss this week, which was for -6 points, but literally 30 minutes later we took another trade and we secured ourselves 40 points. Now I even did the breakdown of this trade inside the live singles room, so every now and then I will do a breakdown of the trade just for the VIP members only. Now that is pretty much it, guys. I want to show you these charts just for transparency reasons, share my losses and wins, and also show you how it would be if you were inside. So if you are struggling with your trading and you want to get your trading to the next level, make sure to go click that link in the description and go secure your spot right now for only $50 a month. Anyways, let's get back to the video. Alright, so as you can see, this is a bearish example. So on ES we have a higher high and another higher high. On NQ we get a high high. However, price doesn't take this recent high and we have a higher low. So this is a bearish SMT. Now I just want to add a little tip for you guys here as well. You always want to be trading either the weaker asset or the stronger asset. So what do I mean by that? Let's say we have a bearish SMT on NQ and you're looking for shorts. You're going to want to trade NQ as it is a lot weaker compared to ES. Now this is vice versa. If you're bullish, let's say ES has a bullish SMT and NQ doesn't, you're going to want to be trading ES if you are looking for longs. So that are the basics of SMT and what it means, how you can use it, etc. Now we're going to be going over a few example trades so you guys can understand it more in depth. Let's get into it. Alright, so this is example number 1. Now as you can see, there is a clear divergence between the two correlated assets. Now these are called correlated assets for a reason, and that is because they move in tandem. They pretty much move the same. Now whenever they don't, this is when you get an SMT, and that is when you get an indication that smart money is in play and price is most likely to reverse in this area. So as you can see here, we have a lower low and we have a higher low. So what this means is pretty much NQ is the stronger correlated asset, ES is the weak one. Now ES on the other hand has taken this low where NQ hasn't. Okay, so that is pretty much what an SMT looks like. Now in this scenario here, what you can expect is a bullish displacement and then you can take your trade from there. Okay, but that is pretty much what a SMT is. It's very simple. It's just a divergence between the two correlated assets, and I want to make something very clear. You use this as a confluence, okay? You don't place trades based off SMTs. So if you see an SMT, you don't just go long. It doesn't work that way. You still have to have your entry model and the actual model that you trade, okay? It has to appear on the chart. All right, so now that you've seen a bullish SMT, I'm going to show you a bearish SMT as an example. All right, so here we have a clear example of a bearish SMT. Now, as you can see here, NQ has taken this high and ES has not, so we can mark this out as a bearish SMT. Now, since ES has not taken this high, and let's say you're looking for shorts, you would be trading the ES instead of the NQ, as ES is the weaker asset in this case. But yeah, that is pretty much it for today's video. It's a very simple technique, but it's a very highly requested video, so I thought I would do a quick and short brief video on it, explaining it, how you can use it, how you can add it to your own entry model. But that's going to be it for today's video. If you've enjoyed, please leave a like, leave a comment, share and subscribe, and I'll see you in the next one.